Alright, fellas. Life in the time of Corona. I'm making this video to try to show some predictive stuff based on prices. So, bear with me. Tate always says, man, I don't understand those charts. I'm going to try to help that. For every time I say, look at the purple line. Here's the purple line I'm talking about in all the pictures I send y'all. This is your RSI, Relative Strength Indicator. This indicator right here is your MACD, Moving Average Convergence and Divergence. And of course right here, this is the stock that we're looking at. This is the Dow Jones Industrial Average, the ETF, DIA. That's for you, Sean. All right, this was a 6-month outlook, but I've been moving it around, so here we go. If you can see right here, December, we were at 27,900 on the Dow. Quickly went to 28,600, which I thought was crazy. It continued to climb to January, well into 29, sorry, these words are in the way, but well into 29,000 territory, which I thought was crazy. I was like, where's the drop supposed to happen for New Year's? Well, that happened January 31st, and it was still 28,000. And then Corona happened right here. February 21st, everything started crashing. Crash, crash, crash. We went all the way down to 18,000, roughly 17,800. This dividend circles in the way, sorry about that. But went down to 17,000 on the Dow. We haven't seen 17,000 for the Dow Jones Industrial Average since like 2008, the bubble burst for housing and all that mess, the other recession that happened. This is a fake recession brought on by news of the coronavirus. Here's the main point. When I was at work, I told my friends and coworkers, hey, we're at 17 and 18,000. If you buy the previous high before Corona, you'll probably make a lot of money when this stuff recovers. Now let me explain that. Let's go backwards on the chart to find out what is the previous high. There are many previous highs. You have to go backwards. This is a previous high while it was dropping, but I'm talking about right here, all up in this area when it was 29,000. So that's how you look for a previous high. You go backwards. What was the last high before this big old drop right here? This one was a high. This is a high. Anything is pretty much a high when you're going backwards. So when we all started talking online about the stock stuff, Nikola and all that, and I started talking about DIA, that was around what, maybe June-ish, maybe somewhere around there. So I started charting this pattern. See this red line? This is the highs of the Dow Jones as it's been going. This red line indicates the lows of the Dow Jones as it's been, getting back to normal. So with every high and every low, high, low, high, low, high, low, high, low, high, low. This is what they would call an ascending ladder or ascending staircase, whatever the actual term. This is an ascending pattern. The Dow is coming back. It's an ascending pattern. It's coming up slowly and gradually with a bunch of highs and lows. So with this red line right here showing every high, this red line showing every low, or not every low, but the average low-ish. This is the June time frame we were talking, which means nothing past this was even made or was happening when we were talking. I made these lines to show what would happen, and look, the pattern is sticking. Red line for the highs, bottom red line for the lows. These right here are crazy instances where it does a crazy climb, but guess what? That's way out of tolerance. It has to come back, and it does. Now, look what's been happening since we were talking in June. It's staying to the pattern. It's staying in between the two red lines. Staying in between the red lines, which I made this way back then. Let me zoom in real quick. Here's what I want to show y'all. Here we are now. We are back to where I said 29,000. These green lines indicate September 1st and 2nd when we went to 29,000. We're back. Exactly where I said we were going to come back to a long time ago. But then look what happened. I told y'all that was a test level. They have to test the previous high to see if this is truly a comeback. And we did. We came back from 17,000 all the way to 29,000 on the Dow already. But I want you to look at this. On September 2nd, look what these lines correspond to. As you can see with my indicator on the screen where the handprint is right here, it has a horizontal dotted white line and a vertical dotted white line. I want y'all to look at the vertical portion of the dotted white line. We're going to trace it down. Follow it down. That high for the 29,000. Follow it down. Follow it down. That's the MACD. Look how that changed and went down. But that's not what I'm really looking at right now. Keep on going down to the relative strength indicator. On those documents that I just sent y'all about an hour ago for the market edge reports, and a lot of them said overbought and oversold. I always use those terms with y'all. This is what I mean when the purple line is above this right here. It peaks over, it's an overbought territory. On the 2nd of September, the Dow Jones Industrial Average was way too high. It was high. We're back. So when it's in this territory where it's overbought, it has to have a dip. This is the overbought territory. Now let's look what happened. That was September 2nd. September 3rd, which was yesterday. Look at this big drop. It went from 29,000, came all the way down here. The 3rd stopped. Let me zoom into this. All right, September 3rd. Market opens from 29,000. I just happened to buy my put option that morning at 9 o'clock my time, Central Time. And look, right when I did it, this is 8:30, this is 10:30. So yeah, around the time I bought my put, and I didn't even realize it dropped. Let's look again over 10:30, 12:30. It dropped. Keep going. It tried to raise up a little bit, and it ended, let's see, pretty much on September 3rd, around 2:30. The market ended around 283, where this green candle is. I'm sorry, I didn't explain if y'all didn't understand these whole candle things. Red means it's dropping. Red is dropping. Green is coming back up. So it dropped this low to 28,000 on the Dow, which is an equivalent of 280 on the DIA ETF, Dow Jones ETF. It climbed up by the time the market closed at 3 o'clock, and that's where it stayed, 283. Now, look at what that also, then it opened on today, the 4th. It climbed up and then started dropping down from 285. Why am I showing y'all this? I'm showing y'all this because it stuck to the pattern. Here's the bottom of the red line right here on the September 4th. It went all the way down to 277. Then look what happened. It peaked right here or dropped down to right there, and it was like, all right, time to buy back up. Staying in the pattern, came up, and then here we go, market close. It ended 281. Look right here with this big drop on the bottom of the red line. Look at what this equates with. Drop, 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 all the way down right here to this purple line. It was getting close to being oversold. And granted, it didn't go past this bottom white line here, but it started rebounding rebounding right here with the pattern line. And look, it came up. We could have made some cash right here on the come up. But of course, they always say you can never pick the very bottom. So, but the point is, you can pick somewhere in there when it's dropping. And then just ride it on the way up. That's why I wanted to show y'all this. Let me know if it helped or if it's confusing. If you want me to say anything else. 10 minutes. That's a long time to listen. My bad.